All right, everyone. First of all, thank you so much for signing up to join Launchit Founder Finance Academy. As you know, this program is designed to help you develop finance skills and money confidence through expert masterclasses, a digital resource hub, and access to one-to-one mentoring. And today, we're very excited to kick off the first masterclass all about the new Making Tax digital changes with Alison Robinson of Ames Accountants, who's not only the most knowledgeable person to lead this session, but also very much involved in our work supporting young entrepreneurs like yourselves. So just to let you know, we are recording this session, and later on you'll get access to the content that you'll be seeing today, and we'll have a Q&A at the end, and we'll do a very short poll as well. Yeah, so thank you so much for doing this workshop, Alison, and please take it away.
Thank you for the introduction, Ed. Making tax digital obviously is the buzzwords at the moment and is sort of what everybody's talking about because it starts from this April, but not for everybody. I will start with a presentation just taking you through what Making Tax Digital is, who it affects, and sort of how we see it panning out. But obviously, until it goes live in April, we don't know 100% how it's going to work. So whoever has to start in April are going to be the guinea pigs. And then at the end, we'll have, as Ed said, there'll be a poll coming up and we'll have some questions, whether you've got questions on hopefully MTD, but even if they're sort of general accounting questions, then happy to take those as well. Hopefully you can now all see the slides. So as we said, we're talking about Making Tax Digital, or MTD, as HMRC shorten it to. And hopefully this is going to do what we're talking about, which is make it simple for you all. If it will go on to the next slide. Okay, so initially, let's just talk about the different legal entities that you could be working through and who is affected and who isn't affected. So initially, if you are a sole trader, then Making Tax Digital could affect you from April this year. Partnerships, there will be a point at which partnerships come into MTD, but at this point, we don't have a date for that. If you are a limited company, then you will not be part of MTD. Okay. So MTD is being marked up as being the new way to do tax returns. Do you work for yourself as a sole trader or earn money from property? Because those are the people that are going to be in the first waves of MTD. HMRC are basically rewiring the way you do your income tax. You won't fill out your tax return just once a year. You'll fill it out once a quarter with some very high level information, and then you will fill out a detailed tax return as you would normally at the end of the year. What you will need to do in order to be able to file under MTD, you will have to use recognised software or some kind of bridging software in order to get the information to HMRC, because it has to be done digitally. You will have to submit quarterly updates, and the deadlines for those will be the 7th of August, the 7th of November, the 7th of February, and the 7th of May. So the 7th of August, you will be reporting on your income and costs up to the end of June. So very much if any of you do VAT returns, it's going to be very much the same sort of timescale as a VAT return. So if you are a sole trader who is VAT registered and comes under MTD, you probably won't be doing two submissions. Your VAT submission will also feed your MTD submission for income tax. You then still have to submit your final tax return by the 31st of January each year. The reason for this is that there could be other information that you need to add to your tax return. So you might have interest income, you might have income from employment, you might have pension income or benefits that need to be added. Those do not come under the MTD filing, so you won't be filing that information quarterly, but you will have to still file that at the end of the tax year. So how do you get yourself ready for MTD? Well, the first important thing is to know at what point you will have to comply. The first submissions are for the April, May, June quarter this year, and that's anybody who has turnover above £50,000. This is based on your 24-25 tax return. The turnover, it's really important to note, this is turnover, not taxable income. And the turnover has to come from two sources, which is sole trade and or property. It doesn't include employment. It doesn't include all of the other things. It's literally those two items. For anybody with turnover in those areas above 30,000, you will have a year's grace and you won't start until April 27. And anybody between 20 and 30 won't start until April 2028. Once these three are embedded, then I would anticipate that April 29 or April 30, everybody else will be, who has sole trade and property or property income, will be under MTD. So it will continue rolling out. These are the only dates we have at the moment. As I said, there is, you have to choose software, and that doesn't have to cost you money. There are free options out there. You can also use what's called termed a bridging software. So if you currently run your accounts in an Excel spreadsheet, there is going to be bridging software out there that will allow you to enter the data into that bridging software each quarter and then upload it to HMRC. We are recommending that you're better off using an piece of accounting software because that will, automatically load up. You won't have to put figures into some other system. But, everybody has the choice to do that. The final stage of how to get ready is if you are falling into the above 50,000 turnover, then you have to sign up for MTD. It doesn't happen automatically. You have to actually go online onto the HMRC through your government gateway and sign up. So how is it going to work? Basically, you will log all of your receipts and invoices as you go. So you will log all of your costs, all of your income as you go through the year. Once a quarter, you will send updates of your income and expenses straight from your software or via the bridging software. It's important to understand these quarterly updates are not tax returns, but you will get back an estimate of the tax you may owe in January the following year based on those updates. But your payments will still be in January and July, and they will still be based on your final tax return that you have to submit before the 31st of January following the year. So this, just to give you an example of how this will work for somebody that has to file for 26, 27, you will file your quarterly income and expenses in August. I've got to remember the 4 dates now, but in the four months, 7th of August, 7th of November, 7th of February, and the 7th of May, you will file those. You will then file your tax return for the whole year from April 26 through to March 27 before the 31st of January 2028, and you will make payments of any tax due by the 31st of January 2028. So payments are not going to change, your payment structures, but by doing this during the year, you will have a better idea of what that tax bill is likely to be, even though it's not due for a long time. Tips that we think will make this easier, and these are tips that we've always given to people when they set up in business. Use a dedicated bank account for your business. It doesn't have to be a business account, but it does need to be a separate account. So it can be a personal account if you're a sole trader, but don't do your weekly shopping out of it. Don't spend your, I don't know, evenings out. Don't buy your clothes. Have 2 bank accounts and have one bank account where the income for your business comes in. You pay out costs just for your business. And if you want money, you transfer money into your other bank account. So once a month, you transfer £500, or as the money's there, you transfer £50, £100, round sums, and then you spend your salary in exactly the same way as you would anywhere else. If you do this, then you will be able to link that bank account that has just the business transactions in it straight into an app or accounting software. You guys are all young. You're used to using, accounts like Monzo. You're used to using Revolut. You're used to using all these online banking options. They all will provide you with a profit and loss. Here's your income. These are your costs. If you only put your business transactions through that account, it makes your life easier. You're only then looking at that and going, yeah, everything's in here. It's then really, really easy to send your quarterly submissions direct from your software. You can also use the software to help produce your end of year tax return, so it's done quickly and easily. So the 2 key things that we suggest is a dedicated bank account, doesn't have to be a business account, and linking that to some kind of an app or software that helps to produce your figures, so that it's really simple to actually do the quarterly returns and also your end of year return. So lots of people are going, great, but what if I don't comply? What if I decide I'm not going to do this? If you do not comply and you are above the 50,000 for the first year, there will be penalties for not submitting your quarterly returns. The way it's going to work is you will gain a penalty point for each submission that is late. And if you get too many points, you will be given a fine. HMRC haven't detailed how this is going to work, but as I said to you earlier, VAT returns are already submitted under MTD and have been for a number of years. And the way they work is you can have 3 points before you get a fine. And each point stays on your record for 12 months. So if you get to the 4th quarter and you've been late on the previous 3, you will get a £100 fine. If you get to the 4th quarter, but you get that one in on time, and then you get the next one in time and on time, the earlier points will start to drop off. So you only have 2 points or 1 point, and therefore you will hopefully not get a fine. But it is much better just to submit them on time. There is no cost to you of submitting these. They are not going to take your tax any earlier. They're not going to make any judgment on you in any way for doing this. So why not just submit it? What happens if you make a mistake? If you found you made a mistake in the previous period, then just adjust your software so that your accounting software so it's correct, or your spreadsheet so it's correct. It is highly likely that these are going to work on year-to-date figures anyway, rather than the period, and therefore the correction should be sent automatically with the next quarterly report, because all it will do is take your year-to-date figure and deduct what you sent in the previous quarter. As I said, this is quite a short presentation because it's very succinct and very specific. But obviously, if anybody's got any questions, I'm happy to take those now.
I'm not sure if I can just go ahead and
Yeah, go
I hope
ahead.
that's okay.
Sorry.
No, thank you, Alison. That was really helpful. I really don't have any understanding of accounting and finance, so that was really useful. So thank you for that presentation. I wanted to know I don't know if this is the appropriate time to ask a question about tax deductible expenses, or that should be asked later. But what is a tax deductible expense, and how does that work? And I'm assuming that only applies when your business starts making money, and then you can deduct your expenses from the tax that you owe. Is that right?
Okay, so a tax deductible expense, if you were speaking to HMRC, their statement is you can only deduct expenses that are wholly and exclusively for the business. That's the black and white, statement. However, some of these things are under negotiation and discussion and, all of those sort of things. So it's really about, did you need to spend the money for the business, or would you have spent the money if you weren't running the business? So that can be things like mobile phone, internet, traveling to meet a client. It can be purchasing something that you're going to sell. It can be purchasing a laptop so that you can run your business. It's very, very varied. But if you can think along the lines of, would I have spent this if I wasn't doing the business? That's a really good way of, first of all, questioning things.
Thank you. Sorry.
The second thing you said was, can you only deduct these when you've made an income? And the answer is no, because in order to get to a point where you are making money, you've probably had to set up the business and go through some costs of initial setup. So I would always expect that when you make your first sale, you've probably got a whole load of costs already set up. So you're already in a loss-making position. And I suppose the third thing then to go on from there is to understand how the tax works on a sole trade versus as an employment, which is probably something you understand more. So with an employment, if your salary is £100, you will get taxed on that £100. With a sole trade, if your income from a customer is £100, you can deduct any costs from that £100. So let's say you spend £50 on purchasing something or doing some travel in order to earn that money, and you only pay tax on the profit. So it's the 100 minus the 50, so you only pay tax on 50. So one of the things I will always say to clients is, if you spend money. So for every pound you spend, you will save yourself 20p in tax. However, don't go and spend the money if you don't need to spend the money, because it's still costing you 80p that you didn't need to spend. Does that answer your question?
It does, thank you. I have a follow-up question.
Oh, no.
Is that okay? Sorry.
Yeah, that's fine.
So say, for example, I spend £1,000 or I make £1,000 on my business this year, but then I've spent £1,000 on services, for example, so paying a content creator, paying my software developer. Does that mean I would be unlikely to have to pay any tax?
You wouldn't have a profit. So if you had £1,000 income and you've spent £1,000,
Yeah.
no profit.
Okay.
But you also have to bear in mind, if you have no other income source, you can also earn £12,500 before you pay tax.
Yeah. Okay.
So your profit needs to be above that before you even pay tax anyway.
Okay. Makes sense. Thanks so much, Alison. Appreciate it.
Is anybody else brave enough to ask a question? Oh, I've got a couple coming up. Is it
Jean?
Tashni?
Okay.
You're on mute at the moment.
Hi, I don't think maybe I accidentally put my hand up,
Oh,
but I
okay.
don't think you have a question.
Okay.
We do have one on the chat.
Yeah, I just saw that. So okay, so a private limited company, in what way are you asking whether that makes a difference? For MTD, you are not going to, a limited company isn't going to be under MTD. If you're talking about the costs and things like that, the same rules apply. The only thing you need to be careful about with limited companies is things like if you were going to put car costs through a business, for example, sometimes you are creating a benefit in kind for yourself personally, which means that there is some personal tax to pay. So you just need to be a little bit more careful. The other concern about a private limited company, and one thing that you need to bear in mind, is that it is a separate legal entity, and therefore you must have a bank account in the name of the limited company, and you must not be using that money for personal expenses. So the recommendation that we put to our clients for sole traders to have a dedicated bank account. In a limited company, you absolutely have to have a dedicated bank account, and you have to treat that money as the company's money, not your personal. Does that answer your questions about differences, Sajan? Second question here is about a limited company need to make before they start paying tax. A limited company pays tax for every pound of profit. But there are, as a director of a limited company, you could be charging a salary, you could be paying into a pension scheme, all of which are costs of the company and come off before the company pays any tax. So again, if you have no other income, if you took a salary of 12,500 from the limited company, you personally would pay no personal tax on it, and the company would not pay corporation tax on that element of profit, because it would be treated as a cost. So with a limited company, you're asking about whether you can put personal things through. It really depends. What you've got to be careful of, Sajan, if you were trading prior to the limited company having a bank account, then there is an issue. HMRC can, and I have seen it done, where they can come back and say, that was not paid to the limited company, so it's not income for the limited company. If what you've put through your personal account are setup costs, so for example, setting up the company, the company could not have had a bank account in order to be set up, then absolutely those sort of costs can go through. Sarah, you're saying those making 2 to 3K a year, they're unlikely to be in a situation where they're going to fall under MTD until at least 2029, 2030. Because it's, if you're only making £2,000 to £3,000 a year, you're not going to be turning over £50,000. If you are, you're doing something wrong.
I have a question. Can you recommend software that is affordable for someone who's a sole trader and that would help to do this easily?
I think it depends on who, on a number of things. Unfortunately, there are some really good softwares out there, and it really depends on the business and what is required. We point people, one of the things that we do is with a startup, we point people towards getting a metal bank account, which is the online NatWest banking. And our point for doing that is you get free agent software for free. So that would then work for any size of business, because it's not the first choice of software. It's not Sage, it's not QuickBooks, it's not Intuit, but it is as good as those. And if you're going to have it free for life and it's connected to your bank account, why wouldn't you?
So you pay for the bank account and not the software?
No, you don't pay for the bank account
right.
either if you're small.
Did you say metal?
Metal.
METAL?
No, it's MET. I don't know whether it's double T, but it's METLE. It might be
yeah.
Okay. Yeah. But yes, we recommend if you're setting up, they are fussy. You can't have more than one account with them. So if you've got 2 businesses, you can only have one account. But and if you're with NatWest, if you've already got a bank account with NatWest, they will also they'll also honour the free agent free of charge. But again, it's only one subscription. But it really does depend, because Intuit, QuickBooks, Xero, free agent, they're great pieces of software. But if you're a very, very simplistic business, then the costs may be overkill. There are free pieces of software out there, or they're going to be, that will allow you to do sort of a lot of these things. And even I think even sort of some of the banks have got apps and things that will hopefully handle the MTD bit. And then Ryan's put up the Metal by NatWest link.
While we wait for other questions, I have one maybe that others would also want to know about. The money from property, what constitutes that? Like, because it's self-employment income, and then
So money from property is rental income, or the holiday let income. So
Anyone else?
Have you put the poll out, Ed?
Not yet, but if anyone else, while we're waiting for you to ask your questions, maybe I can put out the poll quickly. Oh, we have one from.
Yeah, that's fine. You put the poll up. I'll read the question and. So not using any software is fine, but you are a limited company, I think. So you will find it easier to use software at some point. If you're on a pre-launch phase, then it's relatively simple to keep a spreadsheet of all your costs, and then look at sort of what the options are and what you need, because it really depends on the business, how you're selling, whether you're if you're selling online, then some different softwares will integrate with online shops and things like that. So that would also help. There's no reason why you can't run your costs, everything in Excel. But if you need to VAT register, then it becomes important that you are using software, because again, you will fall under MTD for that. But there's nothing that says that you absolutely have to. So, Sarah, you're saying if you change from a sole trader like limited or partnership. So if you are a sole trader and you are above the 50,000 and you transfer to limited or partnership, then obviously the sole trade ceases. So therefore there wouldn't be any MTD on that. And at this point, the limited company and the partnership don't come under MTD, but partnerships will at some point.
Alison, there's another question there just above.
Oh, okay.
So, yeah, it's now below Sarah's.
Right. Okay. Well, no, there's two. Then
I think they're the same.
It's the same question,
Yeah.
right? Okay. I think it really depends. So the question is whether currently sole trader and need to change to MTD. It's important to understand why you want to become a limited company, and what levels of income and profits you've got. Because being a limited company, obviously there are additional costs, there are additional burdens, and you will probably require the services of an accountant. So it's difficult to say whether you should do it before or after. You're being a sole trader and having to report under MTD will get you into a position where you are more controlling your business, ready for being a limited company. So I don't think it matters either way, really. What mistakes do new business owners usually make? I would say the first one is not understanding what costs you can offset against income, and therefore potentially overstating their profits for tax. And possibly the other one that we get a lot is listening to the man in the pub or the man on the train, because actually he has no idea what your circumstances are. And therefore, if he says, oh, yeah, well, I do that and I don't pay tax, or I do this, and, that also causes more issues. Taxes your business will pay. So that depends on what things you're doing. So there are, obviously as a sole trader, you're going to pay personal tax. As a director of a limited company, you're going to pay personal tax on employment if you earn over the 12,500. You're probably going to pay dividend tax on dividends if you're taking dividends. The company will pay corporation tax. On top of that, there are, if either as a sole trader or as a limited company, you employ people, then you will be paying national insurance, and you will be deducting tax PAYE from your employees and paying that cost to HMRC. Obviously, we've talked about VAT, which is another tax. If you work under the construction industry, then there is a deduction called construction industry scheme, which is personal tax but is deducted at source by the employing contractor. So that's another one. There are many different ones depending on import exports, depending on what your business is doing. Any more? And there don't seem to be many people filling in the poll. Come on, there's lots more than 11 of you out there. I believe the MTD is going to be through your government gateway account, yes. But difficult for me to say, because obviously we have agent access, which is a different log on. And obviously because it's digital, I don't quite know how the bridging software and things will work. It would be really helpful if HMRC prompted you on deadlines, but it isn't going to happen. They'll prompt you when you are getting a penalty, because they'll send you a letter to say they're giving you a penalty.
Ed, people are saying they can't see the poll now.
Yeah.
Let me quickly check on that because
Okay, so Jen, you're asking about VAT registration. VAT registration is only enforceable once your turnover is over £90,000. However, it really depends on who your customers are as to whether you should voluntarily VAT register. And this is true for companies and sole traders. Once your income, your turnover is over 90, you must VAT register, unless you are in an exempt trade. If your business is mainly business to business, and most of your your customers are VAT registered, then there is some benefit in you becoming VAT registered voluntarily. If you're selling to the public, there's probably less, because you're suddenly competing with Joe down the road who's not VAT registered, and you're 20% more expensive, or you're losing 20% of your income. So it's difficult. You can't say that you don't have to VAT register, unless your income's getting to those levels.
I just want to make the point, this is the first in a series of workshops for the Founder Finance Academy masterclasses. If there's any specific topics that you want us to cover over the coming sessions, then please do put them in the chat. If this has raised any questions for you and we could do a specific topic on anything to do with this or taxes, then do put them in the chat and we will try and put those on.
There are also other options of different courses coming up as well, aren't there, Laura, during the year, and things which we cover different accountancy and sort of legal and all of those sort of things as well.
Yeah, so do you mean like Launch It Labs?
Yeah.
And
Yeah, there's always other things, isn't there, going on?
Yeah, so keep an eye on our socials for all the programs that we've got happening.
When you're asking about what you should do to make sure your business is financially healthy from the start, the first thing I would say is don't spend anything you don't need to. Don't get carried away with, you've got to have the biggest room to work from. You've got to be, using the best laptop. Try and just spend money you need to, and always think about how much money, set yourself a goal of how much money do you need to get out of this business to live, and set yourself a target. That's what I need, and how am I going to get there in order to have £500 a month from this business? How am I going to do that? How much have I got to sell? What are my costs? And just be looking at things in that way. Always think about your finances. In a lot of ways, this is how Making Tax Digital will help you do this, because it's going to force you to do it. It's going to force you to look at your figures once a quarter. I have so many older clients who don't look at their figures and just give me a bag at the end of the year, and they've got no idea what their business is doing. I think you need to embrace Making Tax Digital and think this could be a positive, because it will make you look at your figures. It will give you an estimate of what your tax might be, because there's nothing harder. If you start your business now, you're not going to pay any tax. Well, let's say you start your business in April, you're not going to pay any tax until 2028. That's a long time to try and keep that money to one side and think about the fact that you owe that money. So having an estimate of what you might owe is really good. It's really helpful.
Laura, just mentioning about in the future, one of our sessions will be around funding routes. So yeah, just make sure to check our website. The schedule should be out like over the next few weeks. And next session on the 18th of February, it'll be all about the support that you can get from DWP for anyone who's self-employed. So make sure to book that session and hope to see you there. Do we have any other questions before we end this session? Let me end the poll first while you think through your final questions for Alison. Thanks for answering the poll, everyone.
Just to say, the DWB session will cover some grant funding that you might be able to access as well.
If there are no more questions, I guess that's it for our first session. And again, we hope to see you at the next one on the 18th of February. And check out our page, launchit.org.uk/founderfinance for all the succeeding sessions. And something about the mentoring is also on that page. We hope to see you next time. Thank you so much, Alison, for your time and for this session. And we'll see you next time.
Thanks, Alison. Thanks, everyone at Launch It.
Bye.
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 Thanks, bye.
Thank you.